The crypto market crash. Definitely getting a mix of emotions already because this is a subject of discussion that has launched many investors into distress and at the same time pessimism about the future of cryptocurrencies. However, you can't afford to be caught up in the web of confusion now because even in this tumultuous period, there are immense opportunities. A bull run is coming and you need to buy something to gain from it. Now the big question is, what to buy? 2022 was a roller coaster year for cryptocurrency markets. The market cap slid from its peak value of $3 trillion to nearly $800 billion in just a span of 1 year. Most of the high-performing crypto coins turned red and witnessed double-digit losses. The crypto investors were on a major selling spree and sitting in tight positions, implying a dip all around. This difficult situation has extended to the current year despite gains which were seen in January. The king of cryptocurrency, Bitcoin, soared to an all-time high of $69,000 in November of 2021 and reached a level of $47,000 in January of 2022, trading at $18,000 post-FTX crash. The entire digital market has turned hot red and shows no signs of cooling anytime soon. There are even a few digital coins and tokens which are reeling worse than others. The native token of FTX, FTT, hit rock bottom amid the FTX scandal. FTT was seen at $26 on September 1st, 2022, but plunged to a devastating $1 with the scandal. Other currencies such as Solana have also seen worst falls. The two biggest cryptocurrencies trading by volume and market capitalization, Bitcoin and Ethereum, have also seen a tragic fall from the FTX crash. Bitcoin is now almost trading at its lows around the $16,000 levels, and in the same way, Ethereum is now trading at $1,200 levels. As a result, the prime reason for the market downturn is the tragic downfall of FTX. FTX's bankruptcy and its spat with Binance have not only instigated a huge sell-off in the market, but has also reduced liquidity from the crypto market itself. These traumatic experiences led to a turmoil-like situation in the crypto industry, which resulted in a high level of distrust and skepticism among investors towards the crypto establishments on the regulation front. Also, the author of Rich Dad Poor Dad, Robert Kiyosaki, has reiterated his warning about market crashes, citing that more than 144,000 people in the tech industry lost their jobs in 2022, and 66,000 more have been let go so far this year. This famed author tweeted that everything will crash, including gold, silver, and Bitcoin. This is just like adding salt to one's wounds. Nevertheless, he told his 2.3 million Twitter followers not to panic, adding that he will use fake dollars to buy more gold, silver, and Bitcoin, which what he's called is real money. He wrote, "Crash is here. Everything will crash, including prices of gold, silver, Bitcoin. Do not panic. Good news, I will buy more gold, silver, Bitcoin, real money, with fake dollars." Kiyosaki had previously explained that gold, silver, and Bitcoin are real money, whereas the US dollar is fake money, rather than being tied to the full faith and credit of the United States. On several occasions, he claimed that he does not trust the Bitcoin administration, the Treasury, the Federal Reserve, or Wall Street. He also repeatedly warned about market crashes, including the biggest crash in world history in October 2022, emphasizing that the stock, bond, and real estate will crash as the Fed continues to raise interest rates, advising investors to buy gold, silver, and Bitcoin. He expects Bitcoin investors to get richer when the Fed pivots and prints trillions of dollars. Robert Kiyosaki also predicted that the US dollar will crash, adding that we are in a global recession, plagued with some soaring bankruptcies, unemployment, and homelessness. Urging investors to get into crypto, he explained that he was a Bitcoin investor and not a trader, so he gets excited when Bitcoin hits a new bottom. While stating that he is buying more Bitcoin, he cautioned that the US Securities and Exchange Commission will crash most other cryptocurrencies. Furthermore, in an essay published by the Atlanta Fed a few days ago, Raphael Bostic, the president of the Fed Bank of Atlanta, warned about the disastrous economic consequences if the Fed loosens its policy prematurely. He wrote, "I believe it remains high," emphasizing the need for the Federal Open Market Committee to increase interest rates more aggressively. In response to a narrative that the Federal Reserve should consider reversing its course of raising federal funds rate lest we go too far and cause undue economic hardship, Bostic said. While that perspective is understandable, history teaches us that if we ease up on inflation before it's thoroughly subdued, it can flare anew. That happened with the disastrous result in the 1970s. He added after the FOMC loosens policies prematurely, it took about 15 years to bring inflation under control, and then only after the federal funds rate hit 20%. We don't want a repeat, so we must inflation now. Boston explained that this is a period that we must determine when inflation is irrevocably moving lower. He believes that we aren't there yet and that we need to raise the federal rates between 5% and 5.25%, leaving it there well into 2024. The situation is tough and is taking a huge toll on cryptocurrencies and crypto investors. We can go on and on about this devastating situation, but it will do us no good if we fail to progress. Of course, with the uncertainty around looming macroeconomic occurrences worldwide, it is safer to observe the markets prudently. It's a good time to observe the nitty-gritty of the crypto market closely and avoid making impulsive and emotional decisions. And who knows, once this chaos fizzles completely, crypto investors may be able to find their favorite digital assets at a much fair value. Whether it is the downfall of such a huge global exchange, FTX, warnings of a renowned financial author, or fear of rising inflation and higher interest rates, the combination of these factors have inflicted a dent on investor confidence as they shy away from making any new investments in the market. However, if we continue to stick to the fears, so many good chances will be missed. This is not the first cryptocurrency investors will witness extreme volatility though. The Terra Luna crash, Russia-Ukraine war, and FTX collapse have all taught investors great lessons. Investors are learning every day to deal with such situations and demanding better rules for operational transparency, governance, and regulations to be put in place. The series of unfortunate events over the past year have highly impacted investor sentiments negatively. Now, investors are playing more cautiously, taking note of the digital assets in which they have invested and found better ways to diversify their portfolios. So now we get to the big question which we mentioned at the beginning of the video. What to buy in this crash? The crypto market showed some signs of recovery in early 2023, although it is back in dire straits again. So the crypto market that started in January is taking a break. Bitcoin prices are down 10% in 2 weeks, and Ethereum has lost over 8% over the same period. Similarly, ultra-volatile meme coins are even taking bigger cuts. Dogecoin is down by 14%, and Shiba Inu has taken a 17% cut over the same 2-week span. In this unpredictable market, many investors wonder whether crypto will ever return to its acclaimed long-term growth. And they will, but not every boat will be lifted by the rising waters. For the first 2 months of the year, Bitcoin has been on a remarkable run. It is now up 41% for the year and trades at just over $23,479. However, there are indications that it is running out of momentum as it tests the $25,000 mark. While Bitcoin briefly touched the $25,000 level in mid-February, it quickly gave up those gains. And notably, the last time Bitcoin flirted with the $25,000 level back in August of 2022, it eventually dipped below the $18,000 mark. As a result, it is now evident that $25,000 is a very important price level for Bitcoin. But is Bitcoin a good buy when it's below $25,000? If you're only taking a short-term view, of course things look spicy for Bitcoin. Everyone is watching the Fed right now for signs of further actions to combat inflation. If the Fed remains persistent in raising rates to tame inflation, then Bitcoin is going to have a difficult time breaking through the $25,000 level. The Fed might eventually trigger a recession, and that's not going to help Bitcoin at all. However, if you take a long-term perspective, Bitcoin brightens up significantly. Every head-spinning prediction made for Bitcoin right now is based on some scenario in which Bitcoin becomes relatively successful on a worldwide scale. Ultimately, Bitcoin remains a good buy, and you can check out Ethereum and the remarkable smart contract platform Cardano ADA. These cryptocurrencies have amazing prospects and track records. After all, history doesn't lie. But of course, what are your thoughts on this? Let us know down in the comment section below. We'll see you in the next video, but before then, check out our other videos to find out why Cardano is living up to the dream of being the Ethereum killer. And as always, make sure to click on the subscribe and notification buttons.